Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, September the 9th. The year's 2022. Let's talk trading. Weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. Let's take a quick peek at the weekly chart. You can see we've touched and gone through the weekly pivot. All the weekly open gaps have filled. Moving on to the monthly, you can see we put in a new low for the year down at 14 or 114.04, on this particular broker. And you can see right now price is getting back to the low of the previous month. In fact, we broke it, but we've pulled back since then. Once again on the week, you can see we actually hit the previous week's midpoint here at 1627, but we dropped about 38 pips off of that. We're 184 pips off the low. And just to let some of you know, I think I may have told you I've been keeping my eye on the yen, and I was shorting up around 144, but I closed out and I didn't hold that trade long enough. There was hundreds of pips to be had there. Notice we put in the opening range for the week. We broke out of the top on Tuesday, out of the top and the bottom on Wednesday. We actually opened out of the top on Thursday, continued up. We dropped below the weekly open but pulled back. And then today we shot out of the top of the opening range for the week and the opening range for the month, but we've pulled back down inside there. We also, of course, broke yesterday's high. Looking here monthly for the year, we are 1,934 pips below the yearly open. Remember, that was over 2,000, and that's kind of key. We're 91 pips below the daily open at the moment. No, I'm sorry, we're 91 pips above the daily open. We're 31 pips below the monthly open. Only a few handful worth of inside bars. You can see we're way below the inside bar. We're not going to have one today, obviously. For today's range for the pounds 152, you can see more pairs are over 100 pip in range than under. And it's kind of interesting because I'm sure you probably heard that the Queen of Elizabeth, the Queen of England, died yesterday. She lived a long life. And I'm surprised that the pound didn't tank on that news. As you can see here, we had a couple opportunities in the Asian session to go long the pound. It peaked out. The boys and girls and non-binary traders in London dropped it. You can see here in New York, they've been picking it up, but they're putting it right back down. The red rats definitely feasted here. A nice move. As far as the pivot, Bambino Flex indicator indicated to go short, but as you can see, that didn't happen. We hit the pivot and has never returned. In fact, we almost hit the daily R3. And let's see, we went across the monthly open, but came back down. The weekly pivot, we just touched it this hour almost, and then went back up. Once again, we took out the daily pivot. We took out that weekly pivot. Remember, I've been mentioning to you the having 4 consecutive missed pivots in a row is very infrequent, very infrequent. So, in fact, I think that indicator missed pivots. We have it set to 250 bars. I think I need to update this indicator so we can actually see how many bars are there. But let's see, there's 52 weeks in a year. So let's see. Let's do 10 years worth of data. So in 10 years, we've only had that 4 consecutive misses 4 times. So very rare occurrence. That was just more impetus for me, more reasons to look for longs. And on the monthly, we haven't quite taken out that monthly pivot. We're 244 pips away. And so for the year, now we're working on our 4th missed pivot. On the weekly, we have 3 misses in the month of August, 1 in April, 1 in March, 1 in February. Started in the lower wick zone, busted out, came into the upper wick zone, out, came back in, and then crossed here at the 1560 level. And that's Walmart likes the 60s. You know, I look for the launch pad at the 50s, but it was really funny because on the broker I was trading on, you see the low was at 1550.3. I was just waiting for it to get to 49. I wanted to go long, but it didn't hit it and it turned around and shot up. So I missed it by a pip. But the thing is, when you're trading, it's so easy to rush into a trade because, and then only to see it drop another 10 pips on you. I didn't want that to happen. So I missed one opportunity there, but hey, there was other opportunities to take trades. So I would rather miss by a pip than get in early by a pip only to see, 10 or more pip drawdown for no reason. Or the reason being I didn't wait for my trade to materialize. Weekly range, 243 pips so far today, so far this week at the 33 percentile. So that's, within, if you're between 30 and 70, 40, 60, that area, that's in the game. But anything low like this, there's going to be an explosion soon. That's just playing the stats. Looking here, we didn't break out at a previous high. 91 pips out of the previous low. High minus close currently is 50 pips for the red rats and 193 for the green rats. And that low, once again, was the yearly low, which, if you look back, I think it was something like a 20-year low. And so anybody saying let's play the rat zone off a 20-year low, they definitely got paid off. High minus open for the week, 172. Open minus low, 71. So buy zone traders were rewarded. Walmart traders, these past 4 or 5 hours, it was so simple. I woke up. I haven't been sleeping very well, and I woke up. It was somewhere around 3 o'clock. So I believe this was 4 o'clock my time. Let's see, 4, 5, 6, 7, 8, 9. Yeah, this was 4 o'clock, and I looked at the charts. I'm half asleep, and I'm thinking. And actually, if I remember correctly, I was looking at that M30 chart right here, and I was thinking, you know what? The way the highs were sloping down, I'm thinking this M30 should cover, but I didn't take that trade. Needless to say, it went from 1610 all the way down to that 1550. There was lots of pips to be had. So, but I was looking at my phone. I didn't even have my computer open for the trade, so I just didn't take it. But hindsight's 2020, but that was one of those setups where I could have just played that cover. And what I mean by cover is that the between the high and low of this candle covers is higher than the close here and lower, or at least equal to the open, so it covers the body. That's what I look for a lot. So you can see here on M30 has the highest rate of cover. So for example, this candle covered this candle. This candle did not cover this candle. This candle didn't cover this one. This one covered. This one almost covered. This one covered. This one covered. This one covered. So a lot of times that's what I'll look for. And the covering is, I'm not looking to take that whole trade. I'm looking for a bias. So here you can see price went up, but when it was coming back down, I'm saying, okay, I should be able to pick up, a third or a half of that cover before it bounces and, grab a handful of pips and then get out. So for example, here, that was almost a 10 pip cover. And could have, bagged those pips. And did you see how fast price just moved? That's just something to be aware of when you're trading, how fast price moves. So if you had been long, you would have gotten smashed. That's why Walmart and I like to get in and out quickly. So you can see here, we're dancing between the 90 and the 99, up and down, up and down. And once again, it's easy to see in hindsight, but when you look at it, you can just, here we had the higher low trade, triggered here, triggered again here at 1597.9, call it 98, and those shorts paid off. You can see here it dropped down to 94, pulled back up. And on those, when it starts to pull up, that's usually when I exit. I'm usually not trying to target the entire move. Just depends on where I am in the trading day, where price is, and how price is moving. Sometimes this might happen in the blink of an eye, and then it blink again, and you get that big shoot down. Sometimes it's nice to wait for the candle to close and take it all. Sometimes you wait for the candle to close and you give back a couple of pips. Just depends on your tactics at the moment, trading what you see. Okay, so close minus open year to date percentage, we're down 14.37. Where it's really getting interesting now is when you look at the year to date accumulated range. 2,344 pips. You can see here there's 1, 2 years back in the go-go 2008, 2009. That's bigger. So in the month of September, we really moved. But then when you looking to the future in October, there's some that are even bigger. So once again, you can see here in 2016, we closed out the year at 3,000. But when you look at the rest of the years, you can see here, right now we've got 2006 was bigger and 2003 is bigger at the end. So we had some big moves in December. So we'll just have to wait. We've got 3+ months and we'll just have to trade what we see. As far as the trade reminder, and we're still below the previous month's lower wick zone. Price is still turning down. Previous was an outside bar, which gives you that outside bar trade there. Other than that, I don't really see anything that's significant. So, fellow traders, I hope you're having had a profitable week and having a profitable month. And as always, I'm going to wish you a fun and safe weekend. And when you come back to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.